Hello, another video again. It's frequency in it, and this is Crash 500 Index. Yes, Crash 500 Index is not spiking; it is moving in continuation, and of the so many percentage of us that are trading this asset of recent, would have made so many profits. Um, yeah, my title for this video is Spike versus Continuation versus Continuation. Okay, Spike versus Continuation is what I'll be teaching in this particular video. And just you see in my screen here, I have the market identified with my trend line 2, support and resistance. As you can see, it is moving in the upward direction. It is going in continuation. But what spike represents is a market that didn't give us any signal but spiked in an instant, within a twinkling of an eye. Nobody knew it was going to happen. Spike went pew, but continuation goes tuk, 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 tuk. Over the years, as a trader, I have chosen to trade continuation over spike. And the reason being is that continuation, in my research and in my experience, has been predictable. Over the years, I've chosen to trade in continuation over spikes because continuations are easily predicted. They go one, and within its 1 1 1 movement, you can always give yourself time to make profitable decisions. But when a spike occurs, your stop loss is usually bigger than usual. You make use of bigger stop loss, and it is not really certain that it's going to happen. But continuation works all the time. You see, throughout the day, being the 7th of April 2025, the market has been drastically going continuation. It spiked today, but if we've been trading spikes, of course, it might have been lose or lose, but continuation, of course, has been a great value right. So anything that has to do with continuation. All right. So over the years, I'd say I've been trading spike. I've been trading continuation over spikes, and why being is because if we trade spike is you know not predictable. Okay, it comes when you are asleep. You market will spike against you when you are asleep. Of course, we now go down to learning about spikes from what pairs like SAU does. All of those economic charts, all of those economic trading pairs that does what they do. All of those pairs that just spike. And so we know spike occurs when 90% of traders are doing the other thing. But of course, there is always a reason for the market spiking, and mostly we know why they do. So if crash 500 wouldn't tell us why, because if there is going to be a spike on other pairs like SVU Euro USD, and other forex pairs, they get an economic challenge, an economic calendar of what these things would be like. And when there is an economic calendar, the economic calendar tells people, traders, investors, and big bankers all over the world it's going to be a spike. And when they're alerted, they will either trade with a spike or not trade with it. So that is what they do if they are trading spike. But you know, usually, normally, mostly, there is no spike in the market. Traders who do not look at the economic chart but only use the plain chart always regret when there is a spike. So initially, they use the continuation in naturally trading the market. The market basically represents continuation and spikes. And cryptocurrency is what we are trading. If we are handling the crash and boom indices, We both know all of these pairs are just cryptographical pair that's that are made by Deriv for traders who want to invest all over the world and those who are trading during holidays and weekends. Forex trading does not give us the luxury of trading during weekends because the banks are closed. But if we trade cryptocurrencies, every cryptocurrencies are open. Even stock markets are closed during weekends, and that is another reason why we trade there. Everybody used to trade there. Everybody used to trade the economic chart. Everybody used to trade the everybody used to trade cryptocurrency. So if you are a cryptocurrency trader and you're looking at trading during the weekends, Derib is the best place for you to start from. If you're trading cryptocurrency on Derib, you have a future ahead of you. You have a future ahead of you to make money with the market because you're trading cryptocurrency. You can trade when everybody is not trading. And to my opinion, that's the best time to trade. However, we go down to the video, we go back to what we were explaining. Video make the about spikes and continuation. We see when spikes come around. But then, if we are going to be trading M's and W's, we need to know that whenever the spike shows up in forms of M's and W, we take them when we see a green candle. And you shouldn't be scared the spike is going to take out all of your profits when it sees you. This is an harmonic pattern um, they call this a godly pattern. You find it everywhere. If you go online and you look for godly pattern, this is a valid godly pattern. And if you're a godly pattern trader, you can as well trade it. And your take profit is going to be 168 percentage of this 168 percentage. It's not the 168 percentage of this. When it is 168 percentage of this, you can see its accuracy is 1 is to 10 breaks to reward ratio, and for that reason, it is a banger trade. 1:6 to 1 when is to reward ratio reached. 1 is to 10. Then the Fibonacci is what we used in checking out for our entry and exit level. But this Gartley pattern too, this pattern XABC, the pattern they call it XABC, the pattern, and they are required given percentage ratio. If this is the value of this video, then I'll just go ahead and teach you what it looks like. 0.618 met. Gartley pattern goes from 0 0.5 to 0.618. It's A to B equaling C gives us 100% to 161.8%. We met it. The third criteria, B to C, we calculate it opening our percentage to, and then B2C is usually going to go from 88% or 50% to 121 percentage, but it went all the way to 90%. Right, we see it here. We were told it got to 90%. Our A to B gave us the 1.42 percentage to have gotten the C leg, and we had the 1 is to 10 is to reward ratio, and that banked us in about $100. We were trading minimum lot size and so much more to have entered. We were mainly trading the pattern. This would have been a loss for us. This could have been a loss, and the loss was just um, 5 USD, of course. Okay, that could have just been a 5 USD loss, and we made the money back when we made it there. This was also another banger trade. 1 is to 1 is 61.8 was reached, giving us a 1 is to 10 risk to reward ratio and more. So thank you for watching this video. This is the video I showed you, and this is to spike you and not to continue you. But thank you for watching. If this is your first time watching this video, like, comment, and the subscribe button, and always come back to watch my videos. See you in my next video. Bye for now.